Welcome back to FinTalk, brought to you by Vermeg. Here we discuss pressing topics in fintech, RegTech, covering regulatory, collateral and digital across banking and insurance and finance. Vermeg has been proud to deliver innovative software solutions in the industry with stability and cost efficiency for our global roster of clients. With over 20 years of trusted transformation in finance and insurance, we're bringing industry's top expertise to FinTalk. I'm Gerald Akhtar, and I'll be your host for this podcast. So welcome back to FinTalk, brought to you by Vermeg. I'm Gerald Akhtar, your host. So today, delighted to have back with me James Phillips. James, welcome. Welcome back, should I say.
Thank you, Gerard. Appreciate being here. Thank you for the invitation.
Always a pleasure. So James, last time we all saw you was at the Future Fit conference, which ended your time at Vermeg. So what have you been up to since then?
Ended my time at Vermeg, yeah. Well, it's been a very interesting period for me, and I think most in particular I'd like to draw back actually, and funnily enough start with Future Fit actually. It was an amazing event, and it was a nice culmination to what, if you've done the maths, for me was 29 years, believe it or not, at Vermeg or its predecessor companies, mostly to do with reviewing change and the impact of change on regulated institutions and how they might go about addressing these challenges. The Future Fit conference itself obviously focused on what was the situation towards the tail end of last year, within the last quarter anyway, or at least looking forward to the last quarter. So what have I been up to since then? Well, again, the only thing that's certain is change, right? I think we can kind of agree about that. It's extraordinary just how much change has been going on. And I folded that into now a new portfolio of activity, I'll call it that, after those 29 years, pretty much just looking at reg reporting, and now looking slightly in the round into what else is going on as far as compliance is concerned and how regulatory technology can help firms that are needing to comply with a number of areas of, in particular in financial, obviously in the financial sphere. So you can now find me at regtechinnovate.com. So that's one word for anybody that wants to have a look. And primarily what I'm doing there is assisting firms that have got go-to-market challenges around how they take their solutions to market. That also means doing some consulting work. It's just starting. So this is a Q1 2023 activity for me around what the RegTechs could do to assist their proposition, their value proposition, their competitive differentiation, the marketing communications they might need, the investment case perhaps around whether it's just the marketing activity that they need to bring their product to regulated firms' attention, and the whole go-to-market piece. And also looking, therefore, most importantly, at how change is a market driver and gives rise to those opportunities that tech firms can bring to bear, or at least the solutions for those situations that reg firms can bring to bear for the assistance of their clients. So it's a bit of a mix to come back to where I was before, where I was only principally concerned about the horizon impact of incoming change around reg reporting and how that changed how Vermeg brought its products to the attention of its market. I'm doing the same kind of thing, but for a wider mix of RegTech firms than just in reg reporting. And I guess that's the sort of super simplification of it. But it does mean I need to stay across market change. And that's, I know, what we're going to get on to discuss a little bit around that there today, not specifically what I'm doing, but what therefore my perspective is on change now. I think that's really what you wanted to ask. I'll stop talking in a minute, let you ask your next question, but just pick up a couple of points just to put that all into context. What does it mean I'm actually doing, right? Given that, as I said, it's just Q1 for me, is I am staying across all of this, both by the reading that you need to do necessarily, but I'm also attending such webinars and listening to these things and presenting where I get an opportunity. Thank you for this. I'm staying alongside what the regulators are doing as far as transforming data collection is concerned, the major initiatives there. The BIS Innovation Hub activity, there's in fact a 2-day online conference I'm attending tomorrow and Wednesday. The City Digital Money Symposium a little bit later in this month. I'm going to Innovate Finance Global Summit in April. A number of ongoing workshop and client activities as well that I'm expecting to come up soon as they get off the ground. So it's really, very much again about observing the marketplace, staying within it against those activity tracks that I mentioned just now, and looking to try and match what RegTechs are offering versus what regulated firms need. There you go. Hope that's giving you a potted of some sort version for what I'm up to nowadays.
Oh, yeah. So keeping busy then. Well,
that's right.
That's 29 years. I didn't realize 29 years, James. That's
1994, Gerard. Yeah, when that was when the first company, which is obviously the predecessor to Vermeg, went into regulatory reporting in the first instance when it was first mandatory electronic. Obviously back then it was DOS and things like that you won't possibly remember here. So
yeah, I think I go back to
modems, things like that.
Yeah.
You know, dial-up modems, and
dial-up modems. Yeah,
it might have even been floppy disk era actually. So there you go. Yeah,
yeah,
it does actually show you how long this has been going, how automated. And you would be surprised, you know, how here we are now, nearly 3 decades later, and firms are still having issues with data. You know, it's always been the bugbear the whole time through.
yeah. I think we can talk for days on data and the problems around that.
Yeah.
Yeah. Oh, at least we've moved away from walking the returns to the Bank of England. Though that's
yeah, that was 1994 when that finished. It was yeah, crazy.
So as you mentioned, that there's been a lot of change, a lot of activity and change as well. Activity from the PRA and the FCA, just to name a few. So we've seen the consumer duty that's going to come up in July. Wholesale changes there. Basel 3.1, there's loads going on there. Strong and Simple recently just come out on the CP. There is a lot on the horizon. So what else do you see that's there? And how would all these kind of at a very high level impact firms?
You've picked out a few of the current ones which are quite impactful upon, well, amongst them anyway, on Vermeg's client base, such as the Basel 3.1 and the Strong and Simple requirements, as you say. But I think, and I'm going to draw it a bit wider, as you said in your question, what else is impacting? I'd like to draw out, and I'll try and summarize this at the end of these statements I'm going to make, where I think the focus should be. The real qualitative nature of all this is pretty dramatic. We're looking at the shifts in accountability. We're looking at the level of emphasis at senior management. Before I get to that, as I say, I wanted to finish on that, so what else is changing. I'm just going to run off a few things, so I was taking some notes on this, right? So amongst the things that you could monitor, other than, as you said, consumer duty, Basel 3.1, Strong and Simple, things like that, you've got the, how should we say, transforming data collection. We have the International Sustainability Standards Boards seeking to get standardization on ESG data, ESG itself, firms being pushed to or running to, perhaps prematurely running to, in some cases, RegTech adoption. Crypto and digital assets. You've got central bank digital currencies, retaining the EU legislation, the royal removals, Financial Services Markets Bill, which comes through later to do that change as far as our EUL is concerned, and to also bring in questions of the secondary objective now being introduced for the regulators. The more recent Dear CEOs in January and February this year particularly were not really holding any punches in terms of where the regulators are expecting management focus to be. Operational resilience is I think is wording, so I'm going to use that a bit in this discussion to try and summarize where management focus needs to be. You've got other areas perhaps a little softer in terms of where we might discuss around the FCA looking at advice versus guidance, all the push payment fraud related stuff that's getting far too much impact in the market and needs to be dealt with. The regulatory initiatives grid, which sort of summarizes all of those matters. BIS innovation, as I mentioned, as well, the Bank for International Settlements innovation work is really gathering steam. It needs to be watched. Buy now, pay later, all the impacts of cost of living, Edinburgh reforms. What else do? Oh yeah, well the S&G in ESG, one needs to focus on those things too. So there are so many things that could be given attention over and above just necessarily the identifiable consultation papers and policy statements. So to try and draw those out, I think I wanted to, given especially current news, I put a couple of comments into social media the other day following on from the situation with the American bank collapses lately. And then obviously we've got ongoing issues with Credit Suisse and so on and other potential issues. I put this statement out, at the moment, it feels like you are happily walking through a town you've been familiar with, but it's recently been found that there are sinkholes all over the place. Wherever you go, the pavement might suddenly cave in. It's all pretty flaky under the surfaces at a lot of firms that we know about right now, probably more flaky under the surface at a lot of firms than we know about right now. So I think what we've seen is a lot of exposure to some things that have been really, really seriously stretched. And if you look at the cumulative impact of years and years and years of low interest rates and lots of loose money being invested into anything ranging from innovation, obviously in terms of fintech innovations or other innovations, or into, of course, crypto, and it's all ultimately gone bang because of the substance underneath it not being where it might be. And if you add to that the trillions of dollars that have been printed to cater for COVID and the obviously political instability in the globe as we find it, all these things are revealing the weak spots, and I'm sure there's much more to it than that. I'm not the right person to speak in strength across any of those points. But what it does primarily do, I think, is bring out and has brought out some extraordinary statements. I've got to find one that, again, I need to just do a quick search for. I was really struck by honestly, and this, I hope some listeners aren't going to be offended by this, but the head teacher analogy that I'll put against some of the comments in the Dear CEO letters. Individuals within senior managers' regime will be accountable for their firm's addressing of the priorities set out in this letter. In 2023, firms must ensure that these lessons from past crises are definitively learned in full and thoroughly embedded across the first and second lines of defence. So these are things like the Archegos capital management collapse through concentration risks that have been overlooked. And where I'm going to get to on this, and I'll try and remember at the end of the podcast, Gerard, if some sort of summary is, I'll say it now in case I do forget, is looking back to look forward as a little phrase, looking back to look forward. There's so much to be learned from what's gone before, so much that's probably obvious if you did look at it, that it perhaps hasn't been brought to the front. And I do wonder if the Dear CEOs are really getting it pushed to that extent. So, head teacher, as I say, it's gone beyond, here's some guidance, just look, listen guys, sort yourselves out. So you've got individual accountability coming through at the executive level, people who will be accountable. So the sinkholes, the head teachers, getting these things embedded, getting risk management against potential failure embedded into the firm's process, getting regulatory compliance embedded, whether that's ESG, or consumer duty, or anything to do with the FCA related stuff around guidance versus advice, for example, embedded into the way things are done. The cultural impacts of all of that are a big part of what I see firms needing to focus on in 2023, over and above, as you said at the beginning of this question, the sort of point things around consumer duty, Basel III, strong and simple, which are, obviously identifiable regulations with dates associated with them. I guess I'm trying to draw out the level of management emphasis that might be put against the cultural changes and the level of accountability that senior management are going to expect to be needing to take for this. You wouldn't think this is new because it's been spoken about for so many years. Every time we see a CEO, senior management accountability and so on is in there. So we need to go on and have a look at how does that reflect itself in behaviour, whether that's, we'll come to this, and we touched on data quality earlier on, for example. So the ability to both have a policy for these things, to have some sense of management cultural change around it, but it's got to have to be measured somehow. So you get into the sort of measurement of data, not just necessarily for reporting purposes or for the measurement of financial ratio under Basel 3.1's new approach to standardized risk and so on, but potentially also leading to be able to measure and evidence through auditability of management behavior around these head teacher subjects. Will you be accountable for? Have you got something that you can show accountability for being resilient, for performing consumer duty, for having looked back to look forward, look back at your potential exposures under the op risk thing, as I mentioned, operational resilience thing? Has there been adequate attention paid to scenarios that could impact a firm's ability to carry out its important business services? And can you evidence that? So lots and lots of emphasis is what I'm seeing now, given the weight of all of this that's coming through on that's the qualitative side of it. And that's kind of where I'm seeing. And you asked me the what else. I'm giving a whole host of what else's, but I think they boil down to those areas which I am at risk of just re-summarizing. The data to support the qualitative part of the discussion you need to have with the regulators about the things that you've got to do from an accountability and behavioural and cultural perspective. And those aren't necessarily just the reporting metrics. Does that make some kind of sense?
No, it does. It obviously, since we last spoke, and since the CPs have gone out and the policy statements and all that have happened, the landscape has massively changed. I think the Basel 3.1 came out about a month ago. Strong and simple, again, was a few weeks, maybe a month. Yeah. But since then, in the last few weeks, we've had whole economic changes. So what that means and what impact that will have, whether they start, luckily, still in CP mode, do they go down the route of tightening them up again, further tightening them up? I mean, there's a lot in there already that we can pull apart, and some are favourable, some is not favourable. But it's going to be really interesting now how the regulator responds in the few coming months.
I think you're right. I mean, there's been so much change since tail end of last year. Tail end of last year, things were not exactly great, but it was principally cost of living in Russia, Ukraine, and the crypto crash. So now you've got, as I said in my statements just now, the sinkholes are starting to show up. All the underlying weaknesses are actually becoming crystallized. And you're getting language in the Q1 2023 letter that is, you will be accountable. Okay, we knew that anyway, but it's now you will. It's like sort of additional level of emphasis that it does mean the Singapore on Thames thing and the bonfire of the regulations is potentially, as I think you've just hinted, I would suggest, and I'm not saying that I've read this anywhere, less obviously on the front burner.
Yeah.
It's kind of a bit risky to start, but you've got to balance that with, of course, also the very active objectives that have been laid down for the UK regulators for them to deal with their expected secondary objective to improve UK competitiveness without damaging resilience. So, that's a challenge.
Yeah. How do they, without over-regulating, you've still got to make money somewhere, right?
So Strong and Simple is a product of that to some extent as well. It's also got an opportunity within Strong and Simple to get that right, so that the amount of effort that's involved to carry on being in business as a smaller firm is proportional to the level of risk that it has. And obvious cut-offs like the size and that there's no trading book and that there's no models applying, then for sure, make it easier. It's not going to dent the resilience of the sector, particularly by not having them fill out forms that are not really indicating any material risk.
Yeah, exactly.
But there's much more to it than that, If you've looked into SVB in any detail, the stories there that I think are going to emerge, and I suspect will continue to emerge as to, why was the firm so okay, it's America, but why was it so able to trade for so long without a permanent CRO in place during 2022?
Yeah.
In amongst probably some of the most adverse trading conditions that have impacted firms lately with that level of exposure to early stage higher risk entities as their clients. I mean, it's like baffling. Yet it happens. There's probably many more out there that haven't.
Yeah.
First Republic just the other day, another one.
Yeah. The CRO was one of them, and then there was something about the LCR. They're not required to populate an LCR or disclose an LCR because of their size and complexity, which is it's just crazy.
Yeah, that's right. They're not in the top 2 of the US banks. They don't have to do that. So there are exposures everywhere.
It's something to watch out for. How much? Yes, Strong and Simple is the idea of making life easier, but since what's happened, how much does that change?
Well, that's also a while away, right? It's a while away before it happens. It should rightly become a part of the future process of making life easier for less risky entities so that they're proportional to their exposures and so on, and that improves the competitiveness of the UK sector and so on and so forth, right? That's fine. But I think, to my mind, as I said in my earlier statements, there's more emphasis can be put on the qualitative aspects of having senior management ensure that they have looked back to look forward, to use my little phrase, look back at what could have impacted them, look back at how close to the wind they actually were during some of the, during crypto winter or whatever it was, or during something else that may have impacted them. I don't know how many banks right now are getting phone calls Monday, having, just another bit of bank saving having gone on. We're recording this as it happens the day after UBS has come in to pick up Credit Suisse.
Yeah.
Only 3 or 4 working days after the Swiss government put up a few billion. So it's like, what? So there are probably conversations going on right now that we don't know about other fragilities in the system. And I would think surely if you're a regulator now, the emphasis is going to be quite strongly on looking to see how firms can, because your firms are your police out there. You've got a limited amount of legwork as a regulator to be able to go out and lift all of the drains. You've got to get the people in the seats to lift their own drains and have a look at what's going on and run scenario tests against all of the potential nasties. So hence I'm reading in red, as it were, those head teacher statements, as I put in the FCA and in the Dear CEOs, albeit they predate SVB, Silvergate and Sovereign and Credit Suisse and First Republic. Yeah.
Yeah, I think this leads nicely onto we talked about firms rising to challenges. Where does RegTech sit amongst all this?
Okay, yeah, right. I think the crux behind my next set of comments is going to come back to data again, right? It's going to come back to the almost impossible situation a firm is in if it can't rely on a improved degree of automation to give those metrics, quantitative or qualitative, as I've described, how green, and I don't mean green in an ESG sense, I mean green as in risk. How red, amber, green are you as a senior management person to be able to look at a green dashboard and go, everything's cool. If you can't see that, then that's probably because there's a data problem. There's something wrong with the information, the metrics, the data about your firm. Now, that doesn't mean just all the counterparty activity, doesn't mean the trades you're involved with, it doesn't mean it means perhaps as well also the extent to which your process is operationalized as a firm. Whether or not there's still an awful lot of manual work going on, whether or not there are unknown risks lurking in undocumented spreadsheets or end user tools that are holding up your risk reporting process internally. I mean, holding up as in supporting your risk reporting process internally, and thus giving senior management an exposure to them, probably an unknown risk, unless you go back and unravel those operational processes. So if I were to be a regulated firm now, I'd probably end up reaching for some RegTechs in due course to see how they can help me, but I've got to start with a really fundamental reevaluation of what it is I need to do as an organization to achieve that head teacher resilience that I referred to earlier on, the ability to be able to say yes to all of the regulator-related and process audit-related questions. And these things are really quite important to me as to how one thinks this through. So you might, as a firm, pause. You might talk to a consultancy firm. You might do many things preferably before you talk to a RegTech salesperson, if you know what I mean. Because you could end up getting rushed into buying what appears to be the solution. But actually there are fundamentals. It's like you've got to get the foundations right before you can build the house. And those foundations, I think, are going to come down to the ability to report. Yep, regulatory reporting, as we've been speaking about before. The ability to identify, evaluate, and measure change in coming horizon, that is to say. So things that have to be done and changed from a compliance perspective. Those two things. The third thing is the ability to show from an operational resilience perspective that your firm isn't going to get displaced or stopped in some way by an operational event outside of its control. Whether that's a cyber hack or a contagion run of some form. And then the fourth thing is to operationalize your process end to end so that you're achieving a senior management green dashboard. It may not be green if things are going badly, but if you're not getting things through, if data is late, if the number of reports let's use a practical example, the number of reports of the S and G related measures under ESG, once you've got the data on that, are starting to go beyond limits, you'd want to know about that at your senior management level. There's so much to be known and there's so much that could be operationalized. So I'm saying reporting, the ability to report, change detection and the incoming horizon associated with that, the ability to have operational resilience around that so as to be able to know whether or not you've got your business interruption risks properly identified, and to have operationalization in process in place so that senior management can see what's going on. You can't get any of that done without decent data. Yeah. And you've got to understand what that data is you need to capture to achieve that. So from reg reporting perspectives, firms like Vermeg can easily advise a firm what they need to capture by way of data to measure a financial risk or to risk mitigation calculation and so on. For some of the other things I've been speaking about today, firm needs to look at it from perhaps a slightly different perspective. How do you identify, has there been enough information gathered for the S&G for under ES&G? Has there been evidence of compliance achieved one way or the other? Have you got documentation to show that the firm has considered the different scenarios that might cause a operational resilience event? And can you get your hands on it easily? And is it version controlled? Yeah. Again, they can go into a process that should be dashboarded. So these are things that I would suggest a firm's worth investing in. If not right now, then pretty soon within 2023, because they're going to be the feature of the 2023 regulators' attention. If you take a reread of the January, February Dear CEOs, that's what they're coming for. They're not just coming, this reliability of regulatory reporting is forever there. It's a pervading item. But the regulators are coming for these head teacher-related items too, where individual accountability comes to the fore. If you can't show, we've got the scenario testing decisions made. These are the scenarios we were looking for. These are the measurements that we would have considered red flags. And no, we haven't got any, and here's the evidence. Then it's going to be a compliance issue. So you can use, as I say, you can use RegTechs around that, I'm quite sure. Certainly you can for horizon management. You certainly can for reg reporting as per Vermeg solution, obviously, or others. There are operational resilience tools out there, and it's obviously possible from a proper process internally, whether that's using workflow tools or other things to operationalize what you're doing. Yeah, but those are where I would see. There you go. Looking back to look forward. Little punchline to make up with all the time.
Perfect. Thank you, James. I think that's we've managed to cover a lot there. You're right. I mean, there is RegTech, RegTechs for everything, right? Yeah,
but you're right. There is a RegTech taxonomy out there, published by many people, to say here's how you could conceive the RegTech world, because there are so many firms providing RegTechs. But what I'm proposing here is a small pause before you consider any of them or leap into making phone calls to any of them, and that a firm should be considering more carefully why and where they need an improvement to RegTech. Many firms will be doing that anyway. They'll be looking at, should we say, moving away from the COVID debt, during which time everything was frozen for a while. And now you've got to a point where cloud is acceptable. Digitization is happening to an extent really quite quickly. There are innovations in how payment systems, legacy IT systems are now in scope for getting rid of. They are paused during COVID. So all these changes in the operating procedure, the changes in the data environment, introduce risk as well. They introduce operational risk. the acceptance of hybrid working implies a whole new set of operational tools. Got to stop and think about the whole design before you rush and buy anything.
Yeah. No, that makes sense, right? I think since with all the stuff that's happened recently, with all the banks as well, it's another. And the dear CEO, I mean, it's been saying it for years, right, to do all this. So yeah, I'd be interested to see how this goes, and maybe we catch up in a few months, James, to see where the landscape actually lies, and has the dust settled and the potholes been filled.
Have the potholes been filled, or have more sinkholes opened? I think it's a bit in the balance, because what we've got here is individual regulators, whether that's the Swiss or the Americans right now, and potentially others not hitting the news, right? That are arriving and filling up the holes, as you put it, really quite quickly, because there will be some areas that have been exposed as being badly flaky, for want of a rather vernacular around it, because of all of the massive and sudden shift from high growth to doom occurred as we went into COVID, Ukraine, and crypto winter, and throw any more else you want into that, cost of living rises as a consequence. These things are just massive weaknesses that all add together and are bringing people down big time. In a few months' time, we might find that there's been a rather unadvantageous outcome. There could have been a substantial number of really difficult crises, or things could have been caught in time. I think we're going to find that the measure of regulators' inspection of cultural change will perhaps be starting to get some impact. I think there may be some case studies by then, possibly, if there's a few emerging now about non-compliance with ESG, for example, with some of the earlier, the SS319 requirements, for example, starting to see some of those. And I think we'll possibly see, therefore, also start to see, in 23 will we, or is it going to be later than that? Will you start to see some substantial back office systems replacements as well, as they start to digitise, as old systems are taken away and new processes become the norm? I'm wondering if 2023 or 4 is going to be the major project era for that.
Yeah.
I envisage an outcome where, as I said, where you've got, senior management green dashboard where everything's on. My old favourite phrase of always on, everything's on. It's just ticking away. It's like thermostat running in the side, keeping everything to the right temperature. Why can't you have that? If you're automating the inbound side as well, what's going to be reported, change detect, how's that going to have to adjust? Get your resilience in place to cater for change and operationalise it. And then anyway. Yeah, let's do it again in a little while when we can take that bit caught up.
No, brilliant. Yeah. James, I appreciate that, and thank you for your time. I know you're busy, so
thank you, John.
Definitely look forward to catching up with you again in a few months.
Thank you so much, and I wish you and everybody at Vermeg the very, very best.
Likewise, James. Thank you so much, and thank you to our listeners.
Thanks, sir. Bye-bye. Bye.